following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is hopeless. Market-wise, let's take a look at it out here. We have the Dow down 154, NASDAQ off 39, S&P's down 17.5, gold contract up $12.90, trading at $11.29, silver up 43 cents at $15.22 an ounce, platinum up 18 at $1,013 an ounce, copper down a penny at $2.27 a pound, light sweet crude, toasted, roasted, all of the above down $2. 41.05. Oil, folks, oil looks like it's going to go for the lows of 2008, which is a total mind blow because you're talking about 32 to 35 bucks. Bonds. Everready bond market, folks, refuses to go down, wants higher price, lower yield, has given us the most consistent information for long periods of time in this marketplace. 10-year today, rejected lower price. It's up 21 ticks right now, 128.04. That's going for its April's highs. 30-year, rejected its lows today. Now it's up a full point and 4 ticks. 158.27, also going for its April highs. In fact, both of them, in the next few days, I expect are going to go over a potential B point of an ABC structure on the way up. And if they take that B point out with volume, guess what? You're going over the April highs, which would just be a total mind blower. King dollar down 590 ticks, trading at 96.48. King dollar's going after its June 18th swing low. That area is going to be 93.30 to 94.44. Euro is up 91 at 111. You got the yen down 59, trading out at 123.82. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. This is absolutely wild, folks, okay? You got the Fed minutes were released. Volatility out here in spades, no doubt. Intraday out here, the market was down a couple hundred. It got back into the green, and now you're back downtown. You know, you are talking about not only just volatility, but you're talking about the amount of large sellers out here are huge. No two ways about that. What you also have is this. When you get fast counter-trend moves like this, this is a typical of the beginning of the bear. It's not, once the bear gets going, folks, what happens is that the markets don't come back. But the beginning of a bear, you know, that's how these markets react. The clue here was that on the counter-trend bounce out here intraday, neither the indices or the ETF structures could take out a swing point. That was the curtains. So we'll see how we come into this close here, but that's the bottom line. That's how this market has set up at this particular point. Now, the Fed, this is what is really intriguing out here, okay? The Fed, bottom line, is saying that, hey, guess what? That they are looking for employment to basically get higher. The Federal Reserve officials said last month that while conditions for rising interest rates were approaching, they need more confidence. Inflation is moving towards their goal and they're looking for the unemployment to basically, well, employment to rise. The thing that's a mind blower is this, folks, okay, is that I have a Bloomberg, okay? And so, you know, 130, 20 or 2, bottom line, across the tape, you know, comes, you know, basically what the Fed was saying. And I'm looking at this thing, I'm saying to myself, this must be a Bloomberg, you know, take on it. Well, the bottom line is that it wasn't a Bloomberg take on it. Bloomberg released the information 24 minutes early. Now, what was really intriguing about this is that when they released the information, and you just didn't need a Bloomberg just to get it, I believe. Okay, I saw this came across. More than likely, it was on Bloomberg.com, too. I don't know if it was, but I know it was on my machine because I saw it come across, and I'm looking, I'm saying to myself, well, this is wild. So anyway, that being said, the market didn't move, okay? The market, you know, it ticked up slightly. It was, you know, because I think half the people didn't really understand that that was the deal. I certainly didn't. I can tell you that right now. Bottom line, because it just didn't look like it. Anyway, bottom line, once the 2 o'clock number come out, you know, with a lot more, market bounces really good. And then gives it up. And I expect what you're going to see here, and this is what bear markets are all about, it's going to give it up right into the lows as we go into this next hour. That's your SPYs and the Dow. We go into the NDX 100, and the NDX 100 is absolutely wild, man. The NDX 100 was down 40 points, ended up being up 7 points, and now you're down another 33 points. You talk about volatility, man, oh man. This is volatility in spades. And if we take a look at the NQs, I'll put the NQs up here. So the 3Qs today got to a low out here of 109.49. We're at 110.16 right now. Same type of setup. It has 15 minutes to see, are they going to hold the line here, or are you going to sell right into this close? If we take a look at the NQs and how they are set up, what you're going to see is that, bottom line, they couldn't get it to higher price. Let me get the volume up here. You came off those highs with the vengeance. You know, we'll see how this shakes out at this this level here, the 45.04 level. My take, as I just said, I suspect it's going to go into lower price very quickly. Gold market. What did gold market do? Gold market takes its swing point out, has lighter volume. You know, bottom line, you get some good juice inside the market. Right now we're at 1130.70. Bottom line, it does need more volume. What we have out here inside this is the gold contract. First off, I might take gold's going a lot higher. Gold is going to be at 1220 before we on a heartbeat. Bottom line, what you're doing out here today is this. We have 137,000 contracts. For the correlation of an ABC structure up, we needed more than 194,000 contracts. The 129, it has overtaken the higher price with higher volume. You know, and when that does that, this is what we're talking about. When you do an ABC structure on the way up, folks, and you have two price points that are so close, you want to take the higher volume. Bottom line, it has taken out the higher price point. Volume's not bad. We're going higher. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down $1.48. You get the NASDAQ off 35. S&Ps are off 17. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. If we take a look at, first you take a look at the SPY, what you're going to have out here, folks, is that you're going to have markets moving down, expanded volume. Thus far in the SPY, we've already done 133 million shares. You did 71 million on the way up yesterday. It's about as intense as you get. You're talking about we're going to do twice the amount on the way down. The door's not open enough, far enough, folks, for folks to get out. Inside the NDX 100, now check this out. The NDX 100, this is about as intense as you get. Inside the NDX 100, at 10:30 this morning, we had more volume than we did yesterday. The NDX 100, you had 35 million shares. We did 13 million yesterday. This thing's going to get taken apart in spades. And particularly inside that NDX 100, which is really wild, is that the way it bounced out here today, man, it went from down 40 to up 5, back down 32. That's about as intense as you can get, no doubt. The IWM, the small caps out here, they're hammering into the lows. It looks like the small caps may be the first ones to actually break out its bottom. The small caps got down, the IWM had got down on August 12th to 117.96. You had volume down there of 46 million. We got down to 118.74 today. It looks like that baby is going to do a volume of about 42 million. So you're banging on those lows with expanded volume. That's saying it wants to basically bust that baby apart. Now, let's go over to the oil contract. Oil, folks, is having a monster problem. And if we take a look at the contract first, what you're going to see is that you get a break lower, you get juice behind the break. You actually can glean more from looking at ExxonMobil and Chevron. ExxonMobil and Chevron led the oil contract lower. ExxonMobil and Chevron are both ABC structures on the way down. They're taking their B point out today. Both look to take it out with volume. If we start with ExxonMobil, Exxon's down $1.50 today. You're taking out the B point, which is 76.33. We're at 76.39 right now. We've done 12.8 million. Exxon needs more than 14.4 million. That's going to, I suspect that's going to do more than 14.4 million, meaning it's going to do more than 1.6 million in the next 45 minutes. That can do that real easy. We've already done 12 million. ExxonMobil, price point, $72.79. That's your price projection. We're at $76.37 right now. Chevron, we go to Chevron. Chevron's also taken its B point apart, taking it out to the woodshed, all of the above. What you have with Chevron, Chevron is down 282. You're at 81.02. Your B point on Chevron, it's already taken out with volume. The B point was 82.89. We're at 81.03. You're blowing it away with 9.9 million shares versus 9.8. We got another 50 minutes left in the session. Chevron, the price target for the ABC structure on the way down is $76.11. That in itself is saying that oil is going a lot lower, and that is going to keep hurting folks on not only the Dow Industrials, but the market in general. Inside the Dow here, let's take a look at what the strength is versus the weakness. You have two stocks that are positive inside the Dow Industrials. You have McDonald's is up 36 cents at 101. Johnson & Johnson is up 8 cents. All the rest of them are in the negative. The leaders are the oil equities. You get Chevron is down 238. That's the biggest drag on the Dow. ExxonMobil's next at 151. Caterpillar's down $1.52. United Health is down 220. Inside the NDX 100, strength versus the weakness. Strength, SWKS, that's up $1.70. You got Dollar Tree up 128. ADI is up 91 cents. ADI is actually giving up quite a bit. ADI was the leader this morning. That was at $60.80 and just gave it up. And let's see, Charter Communications, I believe. No, C.H. Robinson. C.H. Robinson is up $1.08. Now, that is the strength inside the NDX 100. The weakness, inside the NDX 100, SanDisk is the culprit. SanDisk is down $3, trading at 53.81. You have Seagate Technology down 242, and you have Electronics Arts is off $2.24. Some of the high volume stocks in this market, Apple's down $1.94. You have Micron Tech off $121. Facebook is up $1.60. You have Target down, up $1.50. Let's see. Marathon Oil is down $1.10. Big numbers all over the place out here. It's going to be really wild watching this thing shake out. Walmart, we go over to Walmart for a second. Walmart is going to continue to be a drag inside this Dow. Walmart broke down yesterday, broke down with volume. What does Walmart do out here this morning? Gaps lower again. And when you get a couple gaps in equity, you're going to get a third gap too. Bottom line, 2 days ago, Walmart was trading at the 72.23 area. Comes out with numbers last night. Gaps down to 69.24. You're at 68.66 now, and all Walmart had to do is get inside of the 70.25 area, and that says you're going to much lower price. Now check this out. This is where this gets really intense, though. We're only on Wednesday right now. Walmart has already broken the B point of an ABC structure on the way down on a weekly basis. So conservatively speaking, your A point is 79.94. I'm taking the high of May 18th. I actually can take the whole leg, but I'm not going to take the whole leg because you want to stay as conservative as you can. So if we take the A point of 79.94, your B point is 70.36. So you're talking about 8.50. Your C point is 74.14. That's giving you basically a 66 number, just A to B equals C to D. Now, that's the conservative part. If, in fact, this whole thing is the A point, then you really get out of the way. Because then 90, 97 is your A, and 70 is your B. So you get $20, which would get you down to 54. Now, I suspect longer term, that's where this thing wants to go. Why? Because when we pull up the consolidation, what you're going to see on a monthly basis is that when you have done a 12-year consolidation, you break out of the consolidation, it's a false break topside, you're going to go back down to at least the bottom of the consolidation, which is $42. So Walmart, I suspect, is going to continue to really put some heavy selling pressures weight-wise inside the Dow Industrials. We go over to IBM. Guess what? IBM's doing the same thing. IBM, you know, in the last 3 weeks has come down from 173. You're at 154. What you have with Big Blue, Big Blue is also breaking a B point, and man, oh man, Big Blue's going to have it too. Oh, this is going to be intense. So check this out. Man, you got ABC structures down all over the place on the way down. So Big Blue, your A point is 161. Your B is 153. 162. Ballpark $7. It gets you to 149. You break 153, and you're in a whole nother range. 149 is the A to B equals C to D, and Big Blue has the volume to do it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow's down 146. NASDAQ off 32. S&Ps are off 15.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow down $134, Nasdaq's off 29, S&Ps are off 15. If we go over to the XAU and the HUI, what you're going to see, folks, is that we get action. XAU out here, XAU's trading out at 52.06. The B point on this XAU is 52.91. I expect what you're going to see is that it's going to go after it in the next couple days. HUI, what do you have with the HUI? Bottom line, HUI out here is trading, there she goes. HUI is trading at 123.45. Your B point out there is 125.96. One of the first equities that is going for the B point of an ABC structure on the way up, and I suspect is going to have the volume. It's going to be a close call, but it looks like it's going to pull it off, is an Eagle. An Eagle is up $1.81. The B point on this is 25.97. We're at 26.40. We've done 4.6 million shares, and she needs about another 800,000 shares coming into the close. So it's going to be a close call, but the bottom line is that you have the wide price spread, you have the accelerated volume, you have all the above. We'll see if she can do the full deal. An Eagle, what's going to be interesting here is to see, you know, when you go back inside the gold market the last 12 years, the characteristic went like this. The first move off the bottom in 2002 was Goldcorp. Goldcorp was the strongest gold stock for about 4 or 5 years. Then they turned around and they bought Glamis, and I'm glad they did because we own Glamis too. But the bottom line is that Glamis was way too expensive. That started sucking down Goldcorp's actual numbers. Okay, so Glamis was getting gold out of the ground much more expensive than Goldcorp, because Goldcorp at one point was the lowest producer because of Red Lake. Okay, bottom line, so Goldcorp had that run going for a while. Then an Eagle took over in about 2004. An Eagle took over. That was the strongest gold stock for about 3 or 4 years. That gave it up, and then Rango Resources took it over. And Rango took it over up to the highs of 2011. What's going to be intriguing here is to see if, in fact, it's going to be an Eagle once again that's going to, you know, ride to the front. Because what we do have is, if we go to, let's go over to Rango Resources for a second. And Rango right now, it's not bad, okay? Bottom line, you know, we're trading up a buck. You're at 63.43. Now, it hasn't gone after its B point yet. The B point on this is 65.34, I think. 65.43. It'll go after it. You know, we'll see at that particular level, does it have the juice to get up and over it? You know, as I had said yesterday, there are so many of these inside the metal market right now. It's pretty amazing. So once you get the deal that you have these B points getting taken out with volume, folks, ABC structures, and get this straight, are straight line moves. A to B is a straight line move. B to C is a consolidation. C to D is a straight line move. The thing that's impressive about these moves here is that we only went sideways for 4 to 5 days. That is showing that the contract, that's showing that the equities themselves are even stronger. And as we had brought up yesterday, we brought up to the point that you had the Stanley Druckenmiller, who broke the Bank of England with George Soros in 1992. Bottom line, he bought 2.8 million shares of the GLD, which is 20% of his personal portfolio, which is $1.5 billion. Bottom line, what does that set up? What that sets up is this. It doesn't mean that traders are right all the time, but what it does mean is that there are other monsters in the marketplace that are going to pay attention to that, folks, okay? And I expect what you're going to see is you're going to see a very fast acceleration. Now, this information was only released 2 days ago. So I expect you're going to see more of that, and the bottom line is that the way this is set up, let's go over to the dollar for a second, because I know this is counterintuitive, but the bottom line, folks, is that the dollar wants lower price. And it's like, okay, man, how does this work? Well, guess what? You know, the dollar is screaming that you have a seller that's extraordinaire in it. Now, and watch what it is. When we came down, and we came down on the 12th of August, we went from 97.37 to 95.94. You did it with 68,000 contracts. We did a counter trend bounce, and we did 25,000 contracts yesterday. Well, guess what? We have 43,000 contracts today. Now, that's saying it wants to go after its swing low, which is out there on the 18th of June. The top of that swing low is 94.40. The bottom is 93.30. Now, who's the seller? Well, we'll find out, but I suspect what you have is this. Now, so check this out. I want to walk you through this slow because when I saw this piece of information, this was actually a mind blower. You know that the Chinese, they're depreciating their currency, and the yuan, they're depreciating it. Well, what has happened, folks, is that for the first time since 2002, the banks in China, the official banks in China, where the official money is, you can imagine how much people are hiding in China, but the official characteristics and numbers was down $573 billion. Bottom line, I suspect what it actually is that in order to keep the yuan not blowing apart, what you have is that you have the Chinese, the only way that they can keep the yuan somewhat stable is actually by selling dollars, which is going to be a mind blower if that's the case. Bottom line, there's a big seller out here. Now, in that context, what does the whole ball of wax get you? I suspect what the whole ball of wax gets you is this. China devalues. Now, this is a fundamental take, okay? Technically, they're set up to go down. Fundamentally, this is, I think, what's going on. Fundamentally, as China devalues their yuan, all other countries that compete with China have to devalue their currency or they're not going to sell anything, period. So they devalue everything. As they devalue everything, the Chinese turn around and sell dollars, just pushing the dollar lower. And what you have then is what? You have all fiat currencies lower. The dollar is still king dollar and the correlation of what a fiat currency is. However, that being said, guess what? The metal market wants to go north, and it's going north, and it's going north with velocity. Why? Because when you look back, whether it's 10 years, 20 years, 50 years, 100 years, 1,000 years, bottom line, when you're in the gold market, gold doesn't mean that you're going to make money. What gold has done consistently is that you don't lose buying power. That's what it comes down to. Fiat currencies have done consistency that you lose buying power. That's what I think we have happening in this market. And this is the first time that in 12 years that the gold equities have moved counter to the actual market. You know, so we'll see where this baby shakes out, but that's what it looks like it's happening. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow's down $1.50. Nasdaq's off 32. S&Ps are off 16. Gold's up 15.50. Silver's up 47. Bonds. Man, bonds are screaming, folks, that markets want lower price. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Inside the indices out here, let's go take a look at what we're going to have. So we're going to do about, it's going to be a good number. We're going to do about $700 million on the NYSE. And on the NASDAQ composite, you're going to run about let's see, how long? We got a half hour. We'll get 15 minutes left. Man, time flies. We're going to run about 1.7 billion. So what you're going to see out here is that all the ETF structures are going to have much larger volume. You're coming into option expiration, which is really cool because that's going to be, no doubt, highly volatile the rest of this week. You're right next to the swing low that was established out here on the 12th of August. And that is where the market rejected lower price. You know, the SPY got to 205.36. What's going to be intriguing out here today is this, if we close where we are right now, this would be the lowest close since 207.95, since going back to August 7th. You know, so close-wise, you have basically we have a market that looks like it's going to be closing a lot lower with the expansion of volume once again. Now that's on the daily. When you line these up on the weekly, what you have is this. So check that. You got to check this out because this is really hard to do, folks. Okay? And I love it when something is really hard to do in the marketplace. It gets even cooler because it gives you more information. This is what it is. So on the daily basis, you know, we're coming down to get some juice on the way down. On the weekly basis, guess what? On the weekly basis, you actually made it over the high that was established last week. And it looks like we're going to have, so we got over the high on a weekly. The high we're talking about is 210.67. We got to 210.68. Wow, that's a mind blower. And it looks like we're going to have lighter volume on the weekly basis and a failure. Now, that's what you get. That is, what does it mean? It just means the probability goes higher because now what you have is this. You have a low that was established in the marketplace on a daily with volume. On a weekly, you have a high that was established with lighter volume and a rejection of price. The monthly basis, not that we're through the month, but let's just see how this sets up. Because the longer that you can set this up, meaning and look at it, the better information that you get. So on a monthly basis is not giving you anything yet. All the monthly basis is giving us thus far is that we haven't moved since November of 2014. That's how the market has been, and you know, you can take it from there. The Apple, let's go take a look at good old Apple. And you know what hasn't happened yet, folks, is that the IBB hasn't fallen apart yet. When the IBB falls that's when the NASDAQ is going to take a swing downtown. That's going to be extraordinary. What is going to be intriguing out here today is that if Apple does close at this 115.37 or lower, the reason being is that that gets it into the low bar. You know, anything underneath 115.42, and the bulls should try to hold it right at that level. But you close under that level, that gives you 109.63 inside Apple. And of course, Apple has already broken down its 50-day, its 200-day. What you do have with Apple, you know, the Dow Industrials did the death cross, meaning the 50 crosses the 200. Apple is only about 6 days away from also doing the same type of setup. If Apple does that too, and our markets are still low, that's going to set up a good hit. Now, let's go to the IBB, because the IBB, no doubt, is the animal that has held up the NASDAQ composite. It's flat out here today. It's down $1.48, but that might as well be flat because you're dealing with something that's 366 bucks. It's off the high of 400. Bottom line, still hasn't budged. I do expect it to go lower, you know, but still hasn't budged. You have had Biogen blow apart. You know, that's trading at 316, down from 480. Amgen, thus far, has rejected lower price. You know, we got down to 164 today. Amgen is saying, see ya, I don't want to be at 164. I want to do a counter trend bounce. Celgene, what do you have with Celgene? Celgene, same setup. Celgene's trying to close the gap. The key is that I do expect you're going to see that indice go to the lower price, but guess what? It hasn't done it yet. 877-927-6648. Alibaba, man, they took people to the cleaners on this one. This is just a mind blower too, actually. I mean, because it seemed that the rap on Alibaba was as good as I've ever seen in my life, folks. I mean, there's no doubt that equity looked like it was going to take over the world, and it took over the world all right. But guess what? It was a one-way shot. It went out there at 82 bucks, goes up to 120, and now you're dealing with 73. So it's almost cut in half, and that's almost cut in half in 1 year. It also has a high volume swing low at 71.03, so it's going to go after that 71.03 level. Huge number. If we do go over to Asia, and you want to look at what happened in Asia last night, bottom line, what happened in Asia, the Hang Seng is going after its swing low, and it looks to me like not only you're going to go after it tonight, the swing low. So Hang Seng, folks, went from 28,000 down to 23. The low is 22 right now. Last night you get down 300 bucks. We're laying out there at 23. 22,836 is the number. You know, we'll see whether it decides to go after that baby tonight. It's a high volume swing low. The problem is that if you break that number, that is going to be a monster, because you can make the case, if you break that, then you take 6,000 points away from 22. That's how that sets up. So you're talking 16,000. Why? Because that's where this consolidation has been in place for quite a while. And the last swing low that is down here is out there at the 17,000, no, 16,000, there it is, 16,170. That's crazy. And you know what that is, folks? That is the October 011 area. The October 14 area, here she is. This is crazy. So, you know, I've talked about this October 2014 area for a long period of time. Well, the Hang Seng just blew it away. The high of that was 24,000, the low is 22. We're at 23. That came down, it came down 6,000 points attacking that number. That's where this market wants to go. You know, stock by stock have been coming down there. Some of them have hung tight. Others are just basically blowing those away. The Exxon Mobils of the world, the Chevrons of the world, they want to go to the bottoms of the 2008 level, which is just absolute mind blower. There's no doubt about that. If you look at Exxon hasn't moved now since 2006, and we're in 2015. Dow Industrials down 118. You get the NASDAQ off 28. S&Ps are down 12.5. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go take a look at this market. You get the Dow off $102, about 102. Nasdaq's off 22. S&Ps are off 11.5. And the inside that Dow, if we go take a look at... Oh, I got someone on the line here. Let's go to Frank. Hey, Frank, what's happening, brother?
Hey, how you doing, Tom?
I'm doing great, man. How's the... You're living in Gloucester now, right?
Yeah, that's right.
That's a beautiful thing, man. You gotta be digging that, man.
It's nice and cool up here today, I'll tell you.
I bet.
Better than Boston.
And that just looking out over those cliffs and those rocks are amazing, man.
Yeah.
I love it.
True. Hey, I'm looking at the SPY.
Yes.
And I ginned up my own little chart here.
Okay.
And I took a look at all the downtrends that have occurred over the course of this consolidation, I'll call it, since March.
Okay.
And every one of those downtrends has resulted in, at the end, has resulted in an upward break that has gone to a new high.
Right.
With one exception that missed by about 10 cents or 15 cents.
Right.
Now we have this wedge that's been going on since the beginning of July. I don't want to short yet. I mean, this could break either way out of this wedge. This could break upward again.
It could. Listen, man, there's no doubt, man, that each and every downdraft, basically has gone to a new high. I happen to like how this market's been trading, since the last July high, though, even May, really. Since May 22nd, they're selling every one of them. The week of June 19th, however, they spiked that good. And then if we go to July 24th, then to me, it's a different market. But I agree with you, man. There's no doubt that, it doesn't mean you can't get to another high. I don't see it. I think today in itself is a big day, meaning that, you can picture something, folks. You got to picture this, okay? I'm sitting in front of the screen, you're trading. August 12th, you're trading, it's all the way down, it comes all the way back. Now, all day today, I was cognizant and say, okay, it's all the way down, is it going to come all the way back again? Bottom line, it did come all the way back. I had someone in my office at the same time looking at myself, oh my God, this is crazy, right? The daily newsletter, I says, you know what? Because it didn't take out the swing point, for Frank, all right? I says, you know what? The odds are that it should pull all the way back down. Now, that looks like it's going to happen. That sets up a different dynamic, because that dynamic is like, okay, they couldn't get it going. That's saying that someone's out there selling, man, Well, and the bottom line is you don't have to go short right now, because if, in fact, this breaks down, guess what? I mean, you know where I think it's going, and that's that October 4, 2014 level. That's the beginning. So
there's a real high volume candle, actually a set of them in mid-December. I think it's December 15, 16, 17, December 18th.
Okay.
That's really spiked up the SPY to 209.84 is what I have. Is that candle still in play? Is that the range of that candle with very high volume?
Okay,
and
December.
I'm talking 250 million shares.
Oh, that's a mind blower. I know that.
Up here?
No, that is a mind blower, and I don't know if that candle's even real. I remember that day. What he's talking about, folks, okay, that's a quirk, man. There's no here. I'll pull it up on this side because I have it on another chart. Yeah, there's no doubt, man, that candle has always worried me. No, it has. Do you know what I'm saying?
Yeah,
because what you have here, folks, where do you see this, what he's talking about? I don't think it's real, but they never fixed it. We went from 203 to 212. I mean, I don't remember the S&Ps going up 400 points, 500 points. So I don't think that's real. But it's still there. I'm looking right at it right now, man.
Yeah. I know. Does it? I don't see it on a weekly chart.
Oh, that's good to know.
Take a look at the weekly. I'll hang up.
Then guess what? That means that here. Let's put that. Give me that weekly right now.
I'm not sure if I do or not.
No, it's there, man. It's sick.
Yeah, it is. It is there. I see it.
Stay right there, folks. Come right back. Thanks, Frank.
Bye-bye.
Have a great one, man. Have a safe one.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is by an unknown author. Expect the best. Believe something good is going to happen, and it usually will. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it. We got the Dow down 162, NASDAQ off 40, S&P's down 21, gold contract up $17, trading at $1,133 an ounce. Silver up 48 cents at $15.27 an ounce. Platinum up 20 at 1,016 an ounce. Copper flat at $2.27 a pound. Light sweet crude, toasted, roasted, flare it up, baby. Down $2.13, trading at 40.99. That oil contract, folks, looks like it's actually going to go after the 2008 swing low, which is just a mind blower because that's $32. Bonds, 10-year up 22 ticks, 128.04. The 10-year, folks, rejected lower price again today. Went topside. What does it want? It wants to go after its April highs, and it very well could be an ABC structure on the way up, which will actually take it over its last April highs. 30-year. 30-year also rejected lower price. Up, end up being up 1 full point and 10 ticks. 159.01. Same setup with the 30-year. These bonds continue to give the best information in the marketplace, the most consistent information in the marketplace. And what that is that they want higher price, lower yield, which sets up lower prices in the S&P. King dollar down 700 ticks, 96.37. King dollar is going after its June 18th swing low. Bottom line, King dollar came down today on volume once again. Euro up 106 at 111, and the yen down 63 at 123.68. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the markets, folks, it was nasty out there today, and it was a nasty close. When you talk about a nasty close, this baby was in spades going south. And if we take a look at this for a second, let me see. I'll put this up here. What you're going to see, I'm just going to insert that volume up so you can see what we're looking at. Bottom line is that you not only went south, what we had out here, once again, is an amazing expansion of volume. So just check this out. Yesterday, as the market tried to get higher, you did 71 million shares. Guess what we did today, folks? We did 166 million shares. If you don't think the monsters are getting out of this market, just get your stop in, okay? If you're a long-term person, get your stop in. Don't take the grief, okay? All that means is that, guess what? It's like getting your car fixed. You're saying, okay, I don't want to spend $200. If it's over that, get me out. Do some number. Just do some number, because the October 2014 level is going to be coming at us. The Qs, the NDX 100. What do we do in the NDX 100? Same type of setup. And the volume expansion, folks, was across all the ETF structures, was across the indices. The indices, the New York Stock Exchange did 837 million versus 691. The NASDAQ did 1.8 billion versus 1.5. If we take a look at the Qs out here today did 40 million. If you just want to see how bizarre that is, the Qs, there was already more selling in the first hour of this market than the market had all day yesterday inside the NDX 100. The NDX 100 had 13 million shares yesterday. You came down today on 40 million. Insane. That is getting out of town as fast as you can. The small caps. What do the small caps do? Small caps down $1.25. Did 43 million shares versus 26 million yesterday. What the small caps are doing, the small caps want to go after the low and then bust out that low from the downdraft of the 12th of August. And I expect that's exactly what you're going to see. Now, let's go over to the oil market for a second. What has oil done out here? Oil blew out lows out here today. It has volume behind the move. If you take a look at the XAU and not the XAU, ExxonMobil and Chevron, don't buy don't buy these babies. These are ABC structures on the way down. And ExxonMobil and Chevron, folks, have been dictating that oil, number one, wants lower price, and they've led the way down. You know, when you take a look at Exxon, it's just a mind blower. You know, it's like, how does this work? You know, Exxon has just gone a straight line down 25%. We went from $104 down to 76. It blew out a B point of an ABC structure on the way down today. Exxon's trading at 76.23. The A to B equals C to D is 72.79. You take a look at Chevron. Chevron is trading That was down today. CV Chevron today is trading at 80.91, down 253. The A to B equals C to D blows it out at 76.11. Huge problems, huge problems. So let the baby get down into those lower prices, because inside the Dow, of course, when you got Exxon and you got Chevron, those are the two leaders on the way down. Chevron was the culprit. That was number one. That was down 253. Exxon was number two. Intel was number three on the way down. Big numbers. Gold contract. What do we have with gold? Whole different ball game, folks. Gold's going north, and gold's going north with price spread, with a pickup in volume. What we had out here in the gold market is this. We're up 16 bucks. You did 145,000 contracts out here. Now, it's not an ABC up, and in the context of how I like to see them, and this is why. We're going to do the full price expansion. But what you have is this. To stay conservative, you always take the highest volume characteristic. And what we had is that on October 12th, we got to 1125.50, and we did 194,000 contracts. Well, we got a higher high, which is the C point, the following day, but it was only 129,000. Now, if you took that, yeah, you have it. Bottom line, it's going to do it anyway. So because we did 145,000 contracts. This gold contract now wants to run up to 1207. You are at 1133 right now. We'll see how fast it wants to get there. King dollar, what do you have with King dollar? King dollar, get the peanut butter, get the cream cheese out. King dollar's toast, folks. King dollar trading out at DXU5. King dollar's trading down 700 ticks. What you have with King dollar, you had the expansion of volume come out of the stock, out of the deal. Once again, 44,000 contracts after coming higher yesterday with 25,000. Bottom line, what does that mean? A lot more sellers than buyers. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished down at $162. NASDAQ off 40. S&P's down 21. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down $162, Nasdaq off 40, S&P's down 21. And as we do each and every Wednesday at 20 past the second hour, we have our man, Mr. John Logan. And folks, John kicks us off every trading day at TFNN. It's an outstanding show. Starts at 8 o'clock in the morning, goes to 8 to 9. He bisects and dissects not only our markets, but all the markets around the world. And that's crucial to understand, folks, okay? Why? Because all these markets are correlated. Now, as you come over to our website at TFNN, right in the carousel, you're also going to see a piece of software that John has written. It's an amazing piece of software. It's the TAS Profile Scanner Plus. Check it out on the front page. You can test drive this 14 days, absolutely free, no credit card required. You'll see how this software works, number one. There's videos that, as soon as you hit the tag, you're going to see videos that go along with it. It does a huge amount of work for you on a continual basis. John Logan, what's going on?
Hey, Tom, good to be back with you. To be honest with you, I just got out of the shower. This day put me, man, I'm telling you, this was a day to sweat, huh? 30-point intraday move.
I'll tell you, man, you know, I had said to the audience a little bit earlier, so picture, you know, the bottom line is I'm shot up the yin-yang, and you know, after August 12th, I'm saying to myself, okay, man, I see you down there. You rejected the lower price, okay? Yeah. And I'm sitting in my office with another guy at the same time, and, you know, I'm saying to myself, okay, what are you going to do? What are you going to do? And, you know, he couldn't make that swing point. I says, okay, man, this is it. And, you know, the texture of the market, you know, we got a caller, Frank from Gloucester, who's a, you know, long-time listener. He's out there trading. He's got a brand new house up in Gloucester, really sweet little place if you don't know it, off the New England coast. And his question was that, hey, listen, man, every single time that the S&P, you know, has come down in volume, it's come all the way back, and there's no doubt, you know. And I was just saying to him, man, but you know what? The texture of the market has really, to me, has changed in the last 3 weeks, okay? Because it can't make those highs now, man. You know, and someone's selling. And if you were in front of a machine at the close here, folks, there was a nasty seller. Someone threw something. They threw 11 S&P points down at this close, folks. Okay, that is a monster. You can't push the S&P 11 points down without some real juice behind it. You know, so
that's why I had to go take a shower right after the close. I mean, I don't know if I explained that properly, but that was because my chair was full of a pool of sweat below me. It was unbelievable. I mean, you know, the rally, you know, that happened intraday.
Yeah,
literally was. You know, that choked me up. I mean,
it was powerful. Listen, it was powerful. And folks, the rally, this is what's really wild. The rally had volume behind it. And, you know, but because I've done these swing points in it's so weird, man. If you don't take out a swing point, the swing points are where the market talks, walks, and squawks. And I was like, oh, my God, I can't make it to the swing point. It's like, what? You know what I mean? So,
well, that's, you know. Wild. When a lot of people get on the wrong side of the trade too, you know, that's when it really, really violently moves. And I think, you know, ultimately I guess we made the right move at the end of the day. But, you know, intraday, I mean, and when it got going upward, it was over 200 Dow points in a matter of 30 minutes. Yeah. It was crazy.
No, totally.
Yeah.
Totally.
Yeah. I don't know if you watched the show this morning. You know, I've been a little mixed on this market. I mean, you know, it's been kind of churning around up here and not going anywhere.
Right.
And you know, you can look at it a couple of different ways. I mean, and I, you know, have started thinking, okay, well, you know, we've had a lot of bad fundamental news. We're not exactly selling off, as you know. This is not exactly a big sell-off. It's just
that's right.
it's possibly the hint of a start of a sell-off, and that's kind of cool for shorts. But I mean, kind of looking at it from a broad stroke, I mean, you could look at this as consolidation to move higher, but some of the internals I've been looking at, I mean, I look at them in the scanner all the time. I try to, and I've got the scanner up right now, I try to take a kind of a bird's eye view based on the long term.
And folks, if you're in your car right now, here, can you put those back up, all the ETF structures? Because I just want to explain to them what they're looking at. This scanner, folks, you got to go test drive it, man. It costs you nothing to test drive, not even a credit card. If you want to see a sea of red, it is an absolute mind blower. I mean, and I'm talking about the world, folks. Not the only green at all is our own S&P, and guess what? That is hanging on by a thread on the weekly.
Literally.
Yeah, by a thread. Literally. I'm going to break that freaking thread tonight, by the way, John.
Hey, you know what? That could happen. I was saying this morning, I'm so mixed up. I mean, because you can't go long. I mean, it's impossible to really start getting long. But, do you step in large on the short side right now? And what I was saying this morning is, every other index in the world basically has turned red, and is this showing relative strength at the U.S. market? You can look at it two different ways. Is the relative strength of the U.S. market just a shining beacon that you're supposed to step in and buy, or is this thing going to fold over? And we have to kind of look a little bit farther into this and look at the internals of the S&P. And the breadth has been kind of hanging in there. It kind of flipped today a little bit. We talked about 2085.50 was the big number we have to get below to start looking at the breadth and saying, where are we?
Yep.
And can we start stepping on the gas pedal on the short side? 2060 is the biggest number on the board for me. If we get below there and the weekly breadth starts being negative again, we've had this happen before. I don't, I'm tired of it happening and then not happening again. But, that's the big sign. And, you talked about this death cross.
Yeah.
I don't know about that. I don't look at that really, as a big, huge indicator. But
no, I don't either. I bring it up in the aspect because I know what does happen. And
no, I know you don't. I know you don't. I know you kind of just.
No, it's the case that there's plenty of machines out there that pay attention to it. You know what I mean? It's like, okay, man.
Right.
You know what I mean?
Of course. Yeah. And I know you just kind of mentioned it in passing.
You know what I like even better though. This is what I really like better, folks. Okay, and I've always learned more. I'm not kidding. I've always learned more about when people don't say something versus when they do, okay? And if I've learned anything about the death cross and trends in general, right? Trend followers, what happens, folks, is this. Trend followers, as soon as it goes against them, they don't talk about the trend anymore. It's hilarious. No, I'm not kidding, man. That's what I love more than anything, because what happens there to me is that, oh, this is perfect, man, okay? Because you take it for what it's worth. That's kind of how my head just thinks anyway, so.
No, I hear you. And a lot of times, as soon as you notice a pattern or a trend, a lot of times it'll change. So, in my opinion, you got to try to be a little bit ahead of the curve. I mean, you're pretty much a pioneer when it comes to that. I've been watching you for a while, and
you're the pioneer with these breath indicators, man. Between my volume, when I look at those breath indicators, I feel like I'm in heaven sometimes. And I know I can't get cocky, that's for sure, because I've been wrong for so long. So,
well, it's real simple. I mean, we throw this on people's desktop and it's a lot to take in. You got to get used to it. But the three simple things that we do on a day-to-day basis with this is what's the tide of the market?
Yep.
What is the breath saying on your kind of time frame that you operate on, and which should you be shorting, trying to find resistance to sell in the index or support to buy, and should you be looking at the internals, trying to find opportunities based on that long-term view? So I hear the music.
Stay right there, all right?
All right.
Awesome,
cool.
man. John Logan, Tom O'Brien. When we come back, folks, we're going to ask John, and we're going to talk quite a bit about these internals, because the internals are more important than the market, but the internals have been breaking down. John Logan, Tom O'Brien, you stay right there. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We talked with our man, Mr. John Logan. And don't forget, folks, no matter where you are in the world, guess what? Right on your cell phone, TFNN.mobi. That'll get you the full audio. And if you do that, folks, just give it when you hit it, it'll say just click here, listen to the radio. Within like 10 to 15 seconds, you're going to get the flow coming in. You can flow that 24 hours a day. John kicks us off 8 o'clock in the morning, go to 8 to 6 live programming, and then we'll replay that programming. We're going to talk to John about the breadth, but first we're going to talk to him about the oil market, because I know he's got oil up here. Hey, what do you think about that, huh?
You know what? We got some signs that it was okay to possibly start nibbling with the XLE kind of getting up on a shelf and looking like it wanted to go higher, and crude oil had a new profile appear. Had a little bit of a level we could kind of lean against, 41.75. Talked about this morning, and we fell through. The XLE got bombed, and again, that's what stops are for. We had a good risk reward on this trade.
Yes,
45.34 targets, but right now, you know what, folks, looks like sub 40 is a foregone conclusion, and they may do that just to drive quite a few people out of the market if it's going to reverse. Right now, you know, I'm out of this, not trying to nibble as of yet anymore.
Yeah, no, well, listen, man, you know, the ExxonMobil and Chevron, they're both ABC structures down, man. I mean, it's pretty intense. They broke the B points today with volume. I got the price projection on Exxon, I got 72.79, on Chevron 76.11, man. So that's some destruction, man.
Yeah, Exxon's, even when they had the the earnings situation, it just gave you a chance to. I mean, this has been a very weak stock in a sector that has had some shining lights every once in a while. Mostly the gas related folks, but this ExxonMobil has just shown its hand so early, so many times. I mean, it's actually when the XLE rallied up to 80. God, what was it? 9? What did the XLE rally? It was back in March, somewhere in there. I mean, the Exxon couldn't even get out of its own way. So it's been a short for a while, and I don't see any green shoots on this thing. I mean, at all.
Listen, it's just amazing. Fundamentally, folks, if you want to take a look at this number, this is a sick number. So their revenue has got cut by 40% per quarter. 40%. It's like, oh my God. I mean, they're still going to take in $273 billion this year, but guess what? They took in $482 billion in 2012. They took in $486 billion in 2011. Can you imagine taking that kind of money, man?
My God. Ooh.
Get that Scania might be taking that kind of money. So yeah, can we talk? I'd like you to explain to the folks, because there's always new people listening, but I think the breadth is so important that people should actually go over. We should go over it as to what the breadth indicators actually are saying. And you know what I'm saying?
Yeah. So what I'm doing, if somebody can't see this screen, I'll just kind of explain it. What we do is we rank everything. Every instrument in this scanner is over 3,000 instruments. We try to rank them, and by the way, we try to trade on probabilities. I mean,
that's the business we're in. Exactly.
Exactly. A lot of technical analysis. I personally don't put too much of the fundamentals into the equation, although I do.
Yeah, I don't either. I mean, I like looking at the whole thing, but yeah, the fundamentals are going to be taken to cleaners all the time.
Well, I mean, case in point, I let the fundamentals kind of skew my judgment lately, and I shouldn't have. It's like the world's going to hell in a handbasket. Fundamentally, it seems.
Yeah.
Every emerging market has got issues, and the breadth is what I really should focus on to try to clear my head, because everything's in the price, as you know.
It is.
You say it all the time. I mean, it's it is what it is, and what we've done with these breadth indicators. I've got up our weekly breadth right now, and what that means is we're looking at relative to what we define as the balanced area or the fair auction for what a stock should operate within. I'm basically defining the noise level.
That's right. Stock. Yeah.
And whether that stock is trading above that noise level and possibly bullish based on that definition alone, or if it's trading below that fair auction or noise level, trading below. And what we do is we rank all the stocks or the instruments in the S&P,
yes,
in the Nifty 50 out of India, in the Thai Set 100 out of Thailand, across the board, doing a lot of number crunching so you can get these numbers. You can't really get them anywhere. Or you can't get them anywhere else. You can't really get them anywhere else. But what we've done with the weekly S&P breadth, which is probably something to pay attention to for the guy out there who's not sitting in front of a screen all day, but just wants to really understand what the tide of the marketplace is relative to this information. We've got 181 stocks trading above profiles on our weekly, 153 trading below, and 159 trading in the balanced area out of the 500.
Boy, and that's why everyone says, "Where's the market going?" That's 50-50-50. That's amazing. That's crazy.
And that's why I said this morning. It's like no direction.
Yeah.
You could get your face dripped off short in the thing or going long right now.
Yeah.
It's better to let the market probably right now clarify itself a little more.
Yes. No, there's plenty of time.
And Tom, the long-term investor doesn't understand the power of what you said earlier, which was the way this thing closed today. I mean,
right.
All things considered, with the news that came out early and it kind of shocked everybody, and you talked about Bloomberg, I mean, it's basically saying they're not – well, for all things considered, they're not – they're sitting not on the launching pad to raise rates again, and the market has traditionally loved that rhetoric. And right now, we bounced. We did a kind of a sympathy, a little run-up, well, a pretty big run-up, and we just – at the close, we said, you know what, who cares? And
I know,
that's a little concerning, the way that thing closed. And if you have been in the trading world for as long as Tom and I have, you know that is – everybody's not exactly, clapping their hands about this now.
And if you missed the beginning of the show, folks, what happened is that we went down 11 S&P points into the close, meaning into the last 4 or 5 minutes. folks, you can press a Goldman Sachs, any big broker-dealer can press the S&P 3 or 4 points. Man, you got to be a monster pressing the S&P down 11 points. That's a whole different ball game, man. That's about as intense as you can get. So someone's throwing some monster numbers at this thing. That's
people not interested, and I mean in a large way, portfolio managers and everybody else, in being long overnight. Plus, like I showed earlier, those breadth indicators across the globe.
Yes.
There's a sea of red. I mean, there's nobody escaping this. So.
And last night, the Hang Seng, man, the Hang Seng looked like it's going to go after its swing lows tonight, man. This is, if that Hang Seng breaks those swing lows tonight, folks. Okay, let me tell you something. Get out of the way.
Yeah. And people don't understand. I mean, that's becoming more and more a component of China. I mean, Hang Seng, obviously used to be the British, but now it's, the exchanges are kind of getting intermingled, and a lot of cross products, AB shares, things like that. Yes. And that is a big thing. And the problem is, for the Hang Seng is, the Shanghai is, in a weird, the Shanghai index is able to be propped up more artificially. And if you saw that bounce, we really bounced off those weekly on for lows on the Shanghai, that 1335.58, I believe. Yeah. And it bounced, and you got you talk about government intervention. I mean, you've already talked about that to your
for sure.
But
right.
But that could all fall apart, and then that is extremely unsettling for the rest of the globe. Yeah. You're talking about the world's second largest economy. So what I'm looking at, on these crossovers right now, is we're still hanging in there. But if we get to 2060, we turn negative on the long-term breadth. You can't buy that bounce. Cannot do it.
No doubt. Well, listen, man, thank you so much. We look forward to the show tomorrow, man. Look forward to growling a problem with you.
Awesome.
Thanks, John. Have a great one, man. Thanks. Have a safe one. You stay right there, folks. We'll come right back. Dow finished down 162. NASDAQ off 40. S&P's off 40, 23.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had the Dow down 162, NASDAQ off 40, S&P's off 23 percentage-wise. That's still small percentages, folks. You're talking 0.9% in the Dow, 0.8 in the S&P's, 0.8 in the NASDAQ. Volume-wise, you had the expansion of volume big time on the indice. We did 844 million versus 691 yesterday on the way as it tried to make a higher high. NASDAQ, we did 1.78 billion on the way down. Now, let's go over and we start taking a look at the gold market. What do we have inside the gold market? If we go to an Eagle first, AEM, what you're going to see is that we had multiple setups of ABC structures on the way up. Bottom line, these babies are going after the B point. An Eagle was the first one to go after it. And bottom line, the B point on an Eagle, $25.97. We went up $1.74. We took it out. We have done 5.299 million versus 5.3. So the bottom line, you're about as close as you're going to get. Taking that B point out, and this is a nice ABC structure on the way up. Your A point, folks, is $21.08. Your B point is up $25.97, so basically 26. You get $5. That's going to give you $28.47. $28.47 brings you up to the highs that were generated out here on July 9th. Now, my take on this is that what you're probably going to see, ABC structures, by the way, folks, go like this. You can do a 1-to-1 structure, a 1 to 1.382, a 1 to 1.618. What that means is this. The first move is, let's say, 10. I'm just going to use 10 because it's easier to basically look at how the expansion or contraction is. First move is 10. A 1 to 1.318 would be $13.80. A 1 to 150, first move is 10, second move is 15. A 1 to 1.618, first move is 10, second move is $16.18. Now, I definitely don't want a 1 to 1.618. Why? Because when we did make highs in 2011, that's exactly what that was. That was a blow up. When you do more than a 1 to 1.618, expansion or contraction, that's an immediate turn in the marketplace. Now, the gold market, folks, loves to do 1 to 1.50 ABC structures. So we'll see where this lands out. But I expect you're going to see some follow through here, and I suspect it's going to be fast and furious. And why? As we were just talking with our man John Logan, the indices across the world are in bad shape right now. The first indice that is going to be basically, I suspect, putting pressure on our own markets is going to be the Hang Seng. The Hang Seng last night came down 307 points, 23,000. Now, this is what the difference is. The Hang Seng had come off its high of 28,000. Right now, we're at 23. The low is 22,830. If it ever breaks this in one day, it will blow my mind, because that would mean that the Hang Seng has to go down about 3% tonight. Now, that's possible, okay? I suspect it's going to at least get there, probably break it tomorrow night. That being said, this is what the difference is. The Shanghai market was up 1.2% last night. It was down 6% the prior night. The Shanghai market came into a swing point last night, and we came into that swing point with 47 billion. Well, the swing point had 56 billion. So the Shanghai wants to bounce a little. The largest difference, however, is this. The Shanghai market still only allows about 49 to 51% of the stocks to be traded. And what's also happened is that if you own more than 5% inside the Shanghai market, you cannot sell, period. So the Shanghai, for all general purposes, is a closed market. The Hang Seng, folks, is not a closed market. And what has happened is this, is that large money managers that are stuck inside the Shanghai market that have not been able to sell are working on how they can hedge or go delta neutral. And what delta neutral means is this. Delta neutral would mean that if you take a U, what ends up happening with a U is that you're looking in the middle, and whether the market goes up or down, you are where you stand, and that's it. Now, in order to do that, particularly because they can't sell, guess what? They got to sell something else that they think the correlation is going to be, at least the probability is as close that they can be in case everything tanks. That bottom line is that they will make money in Hang Seng, lose money in Shanghai. That's what you have happening. So I expect tonight what you're going to see, it's going to be fast, furious, all of the above. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Thanks for taking my call.
Sure, man. How you doing?
Look at BP on the monthly.
So you got British Petroleum. This has gone just like the rest of these oil stocks. This is straight down from 53 down to 34, and okay, so you're at 34, and it looks to me like we're going to 26.
How about 21?
Where are you getting 21?
On the monthly, you got a high volume low.
Okay, let me pull it back more. I got the first high volume.
I have $21.27 as the low.
I got the 2010 low is 26.75. Where? Okay, let me.
I have stock charts and it says 21.27.
Yeah, no, I got. I get 26.75.
Okay, is that dividend in jeopardy? Annual dividend is $2.38. A lot of British pensioners.
Man. This is crazy.
A lot of British pensioners have this in their pension funds.
Okay, so let's look at this. Man, this is a great question, man. This blows my mind. So picture this, folks. British Petroleum right now is paying a dividend of 6.93%. Let me just look at this for a second.
$2.38 annual dividend.
That's a great dividend, man.
Yeah.
Okay. The bottom line is
they never cut the dividend back in 2010.
Okay, so that's great to know, because and you know what? I wish I could. I'm going to answer this question two different ways. The first way is that I don't know, because meaning that you get a large oil company. It's like, okay, if they didn't cut it back then, that's saying quite a bit. That being said, I've never seen a dividend stay at 7%. Okay, it doesn't. You know, any other equity that I bring up, someone's paying 7%, and say, hey, guess what? It's not going to happen. Now, when I look at just the numbers here, it's like they this year, well, per quarter right now, they're taking in $54 billion. They were taking in 95. So that's got cut in half. So to me, the probability would be that, yeah, they can cut the dividend. You know? You got to use your common sense on these things, man. I know it's hard, but it's like...
It's a high volume low. You keep talking about the high volume lows. Always get retested.
It's going there, man. It's going there.
Okay, thank you.
Cooking, brother. Have a great one, man. Have a safe one. You stay right there, folks. We'll come right back. Dow's down 162. NASDAQ up 40. S&P's down 21. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Dow finished down $1.62, Nasdaq off 40, S&P's off 21. And don't forget, folks, if you'd like to test drive my daily newsletter, Market Insights, or the Gold Report, you can actually test drive both of them by coming over to our website at TFNN, going to newsletters. If you'd like to test drive daily Market Insights, go to Trading Newsletters. See the Market Insights, can test drive that 2 weeks absolutely free. If you want to test drive the Gold Report, go to Newsletters, go to Investment Newsletters. You can test drive that for a month. Now, I'm going to go over bonds, because bonds, folks, have given the most consistent market information that they not only want higher price, but if bonds want higher price, that goes right along with the S&P is going to continue to go to lower price. So the high in the bond market, folks, is April is 165.07. That's in the 30-year. Right now, we're 6 points away from that. The correlation is about as intense as you get, because this looks to me like an ABC structure on the way up. But watch how this sets up. Your A point is 148.05. Your B, which has volume, is 160. You're talking about 12 points. Your C is 156, which gets you 166, 168, which actually takes you over the highs of the 30-year. Now, if I put this on a continuous contract, and you see how wild this is like really crazy. So if we put it on a continuous contract, and we bring this back, what you're going to see is that the 165.26 is not only game, but I expect, you very well could get over it. That's on the 30. We take a look at the 10-year. What you have with the 10-year is this. 10-year also looks like an ABC structure up. The A point on the 10-year is 125.14 to 128. You get $4, which would get you to 131. 131. The high is 129.21. Now, what I think we have, and this is going to be really wild watching how this shakes out, is that, you know, so picture this. That's the technical setup. Now, the fundamental setup would be like, okay, hold it. The Fed's saying they want to go up in rates. The market saying that, guess what? You might want to go up in rates, but rates aren't going up. Rates are actually going down. Now, how we make it up to that level, to either go over that level, test that level with lighter volume, I think is the name of the game. What's going to be so cool is this. If we go and we take a look at the TLT inside this correlation, we bring the TLT up, and I'm bringing this up because I know many of us don't have futures, but when you bring the TLT up, what you're going to see is that the high in the TLT, and that's the 20 plus, the high in the TLT is 138.50. So it's going to go for the 138.50. Where the information can get released, and this is going to be cool, is that are you going to have juice up there or not? Is there going to be volume enough? If there's not volume, then guess what? That would be saying, okay, maybe the largest bull market in the history of our lives may be over. Because the bull market in bonds, folks, started in 1980. We're in 2015. That's how long this bull market's been going. It started at interest rates at 14%. Bottom line, we know interest rates are at 0. We take a look at the 10-year. The 10-year is at 2.126. And what is that all about? What it's all about is that as markets go south very quickly, the amount of bonds that we have out there, number one, are decreasing. Our treasuries are decreasing every day. Every day. Why? Because what has happened is that more money has come into the coffers. There's less money that we've been pushing out there. That's the first part. The second part's going to get really intriguing, what it is as to how many people actually get out of the market and are still going to pay taxes this year. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.